Hi, good morning, good afternoon, and good evening to all of you. So, in this quick revision session, I want to cover the capital gains. So, generally, slum sale, conversions, business reorganizations, all three we covered exclusively in one chapter, business restructuring. To be honest, this chapter is not required in our CMA final. But why we are discussing these things in the regular batch or any other batches also? The reason, nothing but in this attempt, we have an amendments. That's why we have to cover these amendments now in this revision session. Okay, just we can start now. So, already we have an 5 heads of income. One of the head of income is capital gain, charging section for 45 and to 55 we have. That means 45 to 55 of an Income Tax Act 1961 deals with the capital gains only. Now, just 45 subsection 1 is charging section of capital gains. What is the charging section? Just we can revise. Any profit and gains arising from transfer of capital asset. Yes, if it is a capital asset, if that is a transfer, that profits or gains, now we have to charge to tax under capital gains head only. In which year? In the year of transfer. Suppose if any capital asset you have, you are transferred that capital asset. In which year you are doing the transfer? In that year, that profits or gain will be taxable under the head capital gain. Now, so what are the conditions we have to check? Yes, there must be a capital asset. Second one, transfer. In the year of transfer, that is chargeable to tax under the head capital gains only. So generally, section 2, subsection 14, yes, they are saying capital asset definition. So I don't want to cover this capital asset definition now because capital asset includes some item, excludes some item. But remember, excludes, we have some MCQs. That's why I want to cover excludes. Stock in trade is an excluded from the capital asset. Stock in trade is not called as an capital asset. Next, personal effects also not called as an capital asset. Why? Personal effects, that means daily we are using some items, that is not called as an personal, that is not called as an capital asset. Agricultural land situated in non-specified area. What do you mean by the non-specified area? That means rural area. That means rural agriculture land also not treated as capital asset. But remember, personal effects means I will tell you, if anything is used for the personal purpose by the SSE or by his family members, that is an personal purpose. If that is an movable, yes, not immovable, movable. If these two conditions are satisfied, that is called as a personal effect. Personal effect is not a capital asset, but we are excluding these things from the personal effects. That's why these are included in the capital asset. Remember, this list is also, yes, jewelry, archaeological collection, drawings, paintings, sculptures, or any work of art. Definitely, these things can be used by the SSE or his family member for personal purpose and more. So, personal effect we can call. But now we are excluding some items from the personal effect, means that is included in the capital asset. Yes, remember, personal effect is not a capital asset, but a few things are excluded from the personal effect. That means these are included in a capital asset definition. What are the items? Again, jewelry, archaeological collection, drawings, paintings, sculptures, any work of art is treated as capital assets only. Now, how to identify the non-specified area? Because in Act they are defining the specified area, that is an urban area only. Other than the specified area, that is what non-specified area, that is only rural area. In this rural area, if you have any agriculture land, that is not a capital asset. Now, sir, first we can define the urban area. Based on the population, they are saying, how to say, sir? 10,000 to 1 lakh population, 1 lakh to 10 lakh population, more than 10 lakh population, if anything is there, from the city municipal limits, yes, 2 kilometers, 6 kilometers, 8 kilometers radius are urban, other than these are rural. So 268, remember. Yes, what is that? 2 kilometers, next 6 kilometers, next 8 kilometers. Remember, population 10,000 to 1 lakh, 1 lakh to 10 lakh, above 10 lakh, within this area it isn't specified, other than non-specified, that is only rural area. In this rural area, if any agricultural land is situated, that is not a capital asset. But one more thing you have to remember, agricultural land situated in, what is that ma? Agricultural land situated in outside India. That means always it is a capital asset only. Example, one agricultural land situated in Pakistan, one agricultural land situated in Sri Lanka. These are all are treated as capital assets only. Next one definition over. Okay, overall only we are discussed capital asset, and if that is transferred, we are required to calculate capital gain. Now, transfer includes defined in section 2 subsection 47. Transfer excludes in section 47. Includes. Capital asset includes. Transfer includes. Automatically, we are required to calculate capital gain. But now I want to talk about the excludes. So, just one amendment is there in excludes point. Yes, if any capital asset is given as a gift, will, inheritance, irrevocable trust. Here one amendment is, sir, if anything is given as gift, previously any person given as a gift to others, that is not treated as transfer. But now they are amended, if gift given by the individual or HUF to others, that is only out of nature and love and affection we can give, that only we are excluded from the transfer. Gift, will, inheritance, irrevocable trust. If these things are given by the individual or HUF, then only that is not treated as transfer. Amendment ma, just remember. Now, don't think about these are all the things not required in this quick revision. No. Sir, we know, sir, one capital asset is there, that capital asset is transferred, sir. Now we are required to calculate capital gain. But how to calculate capital gain, sir? Now we are dividing this capital asset into two types. One is a short-term capital asset, another one is a long-term capital asset. Short-term capital asset related, we can get short-term capital gain or loss. Long-term capital asset related, we can get the long-term capital gain or loss. Now, based on period of holding, we can divide the capital assets into short-term capital asset or long-term capital asset. Sir, there is an amendment, listen carefully. For this chapter, one date we have to remember, that is 23/7/2024. Before we have one type of classification, and on or after this date we have one more classification. You have to remember both also. So that's why remember. If transfer take place before this date, yes. How to classify the capital asset into short-term capital assets and long-term capital assets are based on period of holding. So that's why all the capital assets shall be categorized into three categories before the date. Yes, 23/7/2024. All capital assets you have to categorize it into three categories. First, listed securities other than units. Units of equity oriented mutual fund, units of UTI, and zero coupon bonds. Remember this category 1 capital assets. Listed securities other than units. Why? Here we are covering the units, that's why here other than units. Next, listed. These are also listed, zero coupon bonds. Yes. If the period of holding 12 months, less than 12 months short-term capital asset, more than 12 months long-term capital asset. Category 2, we have an unlisted shares and land building or both. These two things only we have covered in category 2. So period of holding 24 months, less than or equal to short term, more than 24 months long term. Category 3, we can say simply all other capital assets covered in category 1, category 2. But I will tell you, listed units of business trust. Here, listed securities covered. Then what about unlisted? What about unlisted securities? Yes, here covered. Any other capital asset like plant and machinery, etc., all are covered in category 3. Now you have to verify 36 months, less than or equal to short term, more than or equal to long term. Yes, sir, it is an earlier provision in intermediate level also, you know this one very well. But what is an amendment? Before that, we have three categories: 12 months, 24 months, 36 months based. We can categorize it into short term as well as long term. But in case if transfer take place on or after 23/7/2024, now we are categorizing all the capital assets into two categories only, ma. What are the two categories? Category 1, category 2, I will tell you. So what is the change? I will tell you. What is the change? I will tell you. Simply remember, these listed units of business trust move to first category. What is that? Listed units of business trust move to first category. Yes. So that's why previously we have these things. So now including, previously we listed securities excluding units, but now listed securities including units of business trust. These three are earlier ones only. So what is the change, ma? So first thing in third category move to first category. These all are covered in second category. Instead of unlisted shares, now we are replaced with the unlisted securities. And land and building are both, and next one. Now two categories only we have. So two categories related, we have to check 12 months and 24 months. So I hope you understood what is the change they are given. So rationalization of capital gains related they are giving. These are all the things. Try to remember categories. Yes, three categories to two categories only. What is the change, ma? These listed units sent to one, and these two are merged with the category 2. So no, yes, on or after this date, if you are doing the transfer, while you are verifying whether it is in short term or long term, now we have in two categories. One is in 12 months category, another one 24 months category. Now, so I want to tell you period of holding concept. You know already, this is a very easy concept. Period of holding means normally how many days we are holding that capital asset. Yes, how many days we have in capital asset. But remember, in some cases, that means what, ma? Gift, will, inheritance, amalgamation, demerger cases. So what is the period of holding? Period of holding including previous owner holding period also, that you should remember. Yes, example, Mr. X given the gift to Sanma. Now son is transferring that asset to others. Now son required to calculate capital gain. But what is the period of holding? Generally, if you are applying, yes, this is only you can say as a period of holding. No. Period of holding include a previous owner holding period also. So that's why 9/10 to 24/25. So what are the cases, ma? 49 subsection 1 cases, simply gift, inheritance, will, amalgamation, demerger we can call. In these cases, period of holding including previous owner holding period. But in that cases, amalgamation, demerger, preference shares converted into equity shares, debentures are converted into shares, bonds converted into debentures. In all these cases, yes, period of holding includes the previous asset holding period. Example, now I haven't preference shares, ma, but in this year they are given the conversion of preference shares into equity shares. Now you are selling your equity shares. Now what is a capital asset? You are selling the equity shares. So now period of holding means, many students are thinking this is only the period of holding. No. Period of holding includes what is a previous asset in your hands, ma? Preference shares. Preference shares only converted into equity shares. That's why you have to take that previous asset holding period also for deciding whether it is a long-term capital asset or short-term capital asset. Are you clear? So period of holding cases, these two are very important. You should remember. Now, computation of capital gain. This format is very important. I think you know already. Sir, in case of non-depreciable capital assets, how to calculate capital gain? In case of depreciable capital asset, how to calculate capital gain? I will tell you. Non-depreciable. Sir, example, I have a residential house property. Residential, I am using that house property as a self-occupied purpose. And that I cannot claim depreciation because the depreciation can be claimed on assets which was used in the business or profession. Now, so example, residential house property, land, these are all are non-depreciable assets in your hands. While you are selling that, you have to calculate capital gain under section 48. I'm doing the business or profession, ma. In that business or profession, I haven't plant and machinery. If you are selling that plant and machinery, now we are required to calculate the capital gain under section 50. At any time, while you are calculating the capital gain, you have to check these two sections whether it is in falls under 48 or 50. Now, 48 thing you know very well, ra. Yes, first decide whether it is a short-term capital asset or long-term capital asset based on period of holding. And in your examination, you have to check the transfer date, whether that is on before 23/7/2024 or on or after 23/7/2024. So this thing you know already, just I will recap. Ma. So gross consideration minus transfer expenses, you will get net consideration. Because of the short-term capital asset, no to calculate indexation, just the cost of acquisition, cost of improvement. Then you will get gross short-term capital gain. From these exemptions removed, then you will get the net short-term capital gain. Maybe you will get the loss also. Yes, if I am saying gain, always it includes the loss also. Now, long-term capital asset means gross consideration minus transfer expenses, you will get net consideration. Yes, here you can take indexation. Remember, I will tell you one important point about indexation. Many students are confusing about indexation, but just now I am telling the format. Remember, in case of long-term capital asset, just now we are taking the indexation. Now we can take the gross long-term capital gain. From that, if you are taking the exemptions out, yes, you will get the net long-term capital gain. So this format you know already, but remember, in case of depreciable capital asset, if you calculated the capital gain, always the resultant income will be short-term capital gain or short-term capital loss, because every year from from the year of purchase, every year you are reducing the depreciation. Now that asset value in your hands, that is a mark to market value only. So that's why in case of section 50 computation of capital gain, always the resultant income will be short-term capital gain or short-term capital loss only. Sir, how to calculate? Please remember this format. Gross consideration minus transfer expenses, you will get net consideration. Yes, remember. In your PCBP WDV format, whatever that opening WDV and cost of additions you have, please remove that. Because now we are selling it for the 20,000. Transfer expenses 1,000. This is a 19,000. But in my books, yes, opening WDV as well as if any new asset is purchased in that block, that value is 18,000. Now, what is it? The capital gain, ma? 1,000. No exemptions. Normally, we can take as an example, no exemptions are here. That is short-term capital gain 1,000. Remember, in this section 50, what is the cost we have to take? Opening WDV minus cost of additions. Opening WDV and the cost of addition, you can take it as an. Now, transfer expenses related note point, try to remember, ma. Any expenses incurred in relation to the transfer of any capital asset, we can call that as an transfer expenses. Example, brokerage commission. But one thing you have to remember, security transaction tax, if you paid anything. So normally you haven't listed equity shares. You want to transfer these listed equity shares to others. So listed equity shares are transferred through the recognized stock exchanges only. So now we have to pay the security transaction tax. But that security transaction tax is not treated as transfer expenses. Very important point you have to remember. If any security transaction tax paid by the transferor while transferring the securities to the other person, this security transaction tax will be paid to the recognized stock exchanges. It is not treated as transfer expenses. Now, cost of acquisition point, ma. Yes. So, cost of acquisition means I will tell you. Sir, normally cost of acquisition we have to remove. That means cost of acquisition or indexed cost of acquisition we have to remove. What is that cost of acquisition? Now we can discuss. Cost of acquisition in case of tangible asset. Yes, I will tell you. If you purchase it directly, so cost of acquisition is nothing but cost to the SSA. I am purchasing one asset, sir. Directly, what is the cost you incurred for purchase of the asset? That is only the cost. If acquisition before 1/4/2001, sir, Sale consideration, now you are taken that up to market values you are taken. But cost long ago, that's why, yes, they are given the benefit of fair market value. What is that? Actual cost or FMV as on 1/4/2001, you can take whichever is higher. Sir, if acquisition is done on or after 1/4/2001, cost of acquisition is equal to actual cost only. Sir, this is called as FMB benefit. If any asset is purchased before 1/4/2001, the cost of acquisition while computing the capital gain, you can take actual cost fair market value as on 1/4/2001. This always they will give you an exam, don't think about it. Sir, in case of indirect ownership, that means we are not purchasing that, but these are all the things are given as a gift by the relatives or any modes under section 49(1), gift, will, inheritance, etc. Now, what is that cost? For us, it is a free, but cost to the previous owner we have to take. Sir, if previous owner purchased before 1/4/2001, for the previous owner also we can apply the FMV benefit as on 1/4/2001. If previous owner purchased before, on or after 1/4/2001, actual cost only we have to take. And very important note point, FMB benefit as on 1/4/2001 is applicable only for tangible, not applicable for intangible assets. Yes. Sir, sale consideration, you are taken the market to market value, sir. But cost 1/4/2001 before I purchased, that's why no problem. In 1950 you purchased, now that is a miscellaneous amount only. Now that actual cost example 100 rupees you incurred in 1950. Now fair market value as on 1/4/2001, whichever is higher only you can take it as a cost of acquisition. Now remember, bonus shares related cost of acquisition important, we can expect as an MCQ also. If bonus shares are allocated before 1/4/2001, FMV benefit we have to apply. Actual cost 0. FMV as on 1/4/2001 value, whichever is higher we can take. Next, if allocated on or after, FMV benefit is not applicable, actual cost we have to take. What is the actual cost? My bonus shares actual cost is 0. So here we are applying the FMV benefit, that's why we can take the whichever is higher means FMV as on 1/4/2001. But if allocated on or after, that actual cost only taken as cost of acquisition, that is 0. Now this very important point, ma. FMV as on 1/4/2001, it is called as an FMV benefit in our simple language. Okay. Can you tell me when we can give the FMV benefit, ma? If asset acquired before 1/4/2001. Sir, movable, it is very easy. Already we discussed. In case of immovable, one twist they are given. Actual cost and FMV and SDV. That means they are not given too much FMV benefit. They are restricting with the stamp duty value. Please take FMV or SDV as on 1/4/2001, whichever is lower, that we have to compare with the actual cost, whichever is higher. And if these are all the things are purchased on or after 1/4/2001, cost of acquisition equal to actual cost. Cost of acquisition equal to actual cost. So as of now, we discuss at the, yes, what is that? Tangible assets related cost of acquisition. Remember FMV benefit in case of immovable properties. Cost of acquisition section section 49 is talking about the tangibles and section 55 talking about intangible. Intangible capital asset example, goodwill, trademarks, yes, copyrights, patents, right to carry the business, route permits, etc. If these are self-generated, cost of acquisition is nil. If these are purchased, cost of acquisition we have to take it as an actual cost. Important. Now, cost of improvement point I want to tell you. So as of now we discussed cost of acquisition, meaning now we are going to know about the cost of improvement. Remember, any capital expenditure, not revenue expenditure, incurred by the SSE or previous owner. But remember, Why we are incurring that capital expenditure? For improvement of capital asset. For improvement of capital asset, that must be incurred on or after 1/4/2001. Sir, why they are putting this condition? If anything is incurred before 1/4/2001, that is directly reflected in cost by using FMB benefit. Sir, one improvement is done in 1995. Ignore that. Why? Because if you want to call as an improvement, that must be incurred on or after 1/4/2001 only. Sir, if any improvement is done before 1/4/2001, that should be ignored because it isn't directly reflected in an actual cost by using the FMV benefit. Cost of improvement in case of intangible assets nil. Sir, indexation facility is also available in case if that is a long-term capital asset. Forget about this point. I will give you the clarity related to indexation at the end of the session. Don't think about it. Indexation facility available. Okay, now I want to talk about the indexation. Sir, indexation benefit only. Why? I will tell you. Sir, long ago you purchased one asset, sir. Yes, in 1995, 96 you purchased one asset. So now in 2024-25 you sold. Sale consideration you are taken that up to market value. But they are saying yes, actual cost. So that is very low. Apply 1/4/2001 fair market value. Whichever is higher, you can take it as a cost. But sale consideration, you are taken that market value. Now we are bringing this value to the fair market value as on 1/4/2001. That is also not a correct thing. Now by using that indexation in case of long-term capital assets only, we have to apply that indexation. So normally we have a cost inflation indexation factors. So that is a base year starting from the 2001 to 2200. Now for present examinations is 24-25 is 363. So cost of acquisition, please take for that transfer year CII cost inflation indexation factor or purchase year or 100. So if you purchased yes any one of these years, you can take the purchase year. If thing purchased before that 1/4/2001, you can take base year as an 100. So for improvements also we can take that yes CII in the year of transfer divided by CII in the year of improvement. Why we are not taken 100 here? Because any improvement done before 1/4/2001, we ignored that. If asset was purchased before, indexation will start from the which year ma? 2001, 2002. That is only the base year. From that year only we have an cost inflation indexation factors. Are you clear ma up to now? Yes, these are the points related to capital gain as of now. If you are observing that we are going in this format way only. So cost of acquisition we discussed, the cost of improvement we discussed, and indexation also we discussed. Are you clear up to now? Yes. Next amended section in our discussion, that is 50AA. Yes. What is this 50AA, sir? I will tell you. Computation of capital gain in case of units of specified mutual fund, market linked debentures. Remember three things ma: market linked debentures, unlisted bonds or debentures. Three things ma: specified mutual fund units, market linked debentures, unlisted debentures, unlisted bonds which is redeemed, transferred, matured on or after 23/7/2024. That is only the amendment. Previously we have two only. Now they are added this security also. Unlisted bonds, unlisted debentures, these are all also falls under section 50AA. Sir, what this section? They are directly treated these three capital assets as a short term only, irrespective of the period of holding. Don't apply. Yes, before, yes, we haven't. Normally after that amendment, how many period of holdings we have? Two categories, 12 months, 24 months. Don't apply that things. So for these three assets, directly we can treat it as a short term capital assets. Now how to calculate the capital gain, sir? Yes, gross sale consideration minus transfer expenses, you will get net consideration. From that, yes, cost of acquisition, You will get a gross short-term capital gain. These are all are the financial, normally the financial assets like debentures, specified mutual fund units. These are all normal assets only. No need to take any improvement related. And minus you can take exemption. Then you will get net short-term capital gain. Why? Because this nature of assets itself a short-term capital asset. That's why maybe you will get a short-term capital gain or short-term capital loss. Now remember, with respect to if any STT is paid, yes, if any STT paid, that will not allowed as a transfer expenses. So while you are taking the transfer expenses, all expenses you can take it as a deduction, but security transaction tax you can't take it as a deduction. You can't take it as what ma? Deduction. Are you clear up to now? Next section in our discussion, that is on 51, important. So not amended but important. Sir, forfeiture of advance money received. Example, Mr. A wants to transfer this property to Mr. B. Yes, the negotiations are done. Yes, during the negotiations, Mr. A received that advance money also. That is a token money. Now, but these negotiations doesn't resulting into the transfer because the failure on part of the buyer. Buyer given the advance money, but buyer is not at all interested to take this property. So now whatever that advance received, that is cancelled by the Mr. A. That is a forfeiture of advance money. Now that is an income in the hands of Mr. A. How to tax this? That only we have in section 51. Are you clear, ma? Section 51 says that yes, tax treatment clearly they are saying yes, if forfeiture of advance money is done before 1/4/2014, yes, we have a treatment. Forfeiture amount shall be reduced from the cost of acquisition in the year of transfer of such capital asset. Okay, now you are not at all transferred. In future, maybe you can transfer this asset while calculating the capital gain. Yes, example, I will tell you, ma. This is an happen in 2010-11. You are, yes, 2 lakh, you are forfeited. In 24-25, you are transferred. So while calculating the capital gain, Mr. A required to calculate the capital gain, sale consideration 100 lakh minus not cost of acquisition. Please take the reduced cost of acquisition. You purchased it for 20 lakh. So now this is an income, na? Not taxed. Now in the year of transfer, please reduce it from the cost of acquisition. On that only we can apply the indexation benefit. That is only the treatment they are saying. Please remember, forfeited amount shall be reduced from the cost of acquisition in the year of transfer of such capital asset. Income, na? Not directly taxable, indirectly that is taxable in the year of transfer of such a capital asset. Sir, in lifetime if he is not transferred, that is not taxable. If in the year of transfer we can give this tax treatment, sir, in my lifetime I am not at all transferring that property. Now this is an loophole. Sir, on 1/4/2014 they made an amendment to this provision. Sir, if prospective amendment they made, what is that prospective amendment? No problem. Yes, if the forfeiture of an advance money is done on or after this date, so that forfeiture amount directly taxed under that income from other source in the year of forfeiture. So the now with the amendment, they have resolved all the loopholes also. In your exam, if this question is, if this concept is given, forfeiture of advance money related point, if they are given, you have to think date of forfeiture. Yes, date of forfeiture. Whether they are given, yes, date of forfeiture you have to check. If the date of forfeiture is before 1/4/2014, one treatment, on or after 1/4/2014, different treatment we have. Still, you have to remember both the things. Now, I will tell you exemptions important in normal other chapters like DTA also we have to use these exemptions. Most important exemptions are 54 series. Now I will start the 54 series exemptions. So first 54 only directly I will start. This applicable for individual or HF only. I will tell you the reason, because here transferred asset is a long-term capital asset, a residential house property. Normally, the residential house property can be held by the individual or HF only. So definitely you have to calculate capital gain. Out of this gross capital gain amount, if you invested in one more residential house property, yes, that residential house property you can purchase or construction also, okay. So this is a reinvestment based exemption. Time limit from the date of transfer, construction related 3 years, purchase related 2 years they are given. But remember here they are given the one magic thing. So transfer date before 1 year before, if you purchased any house also, that is eligible for exemption. Capital gain deposit scheme is available. Simple points I will tell you. Sir, they are saying after the date of transfer, 2 years, 3 years are available for investment. But we have to file the return of income in the assessment year only. Okay, how can I invest within 2 years or 3 years, sir? So that's why no problem. Go and deposit that amount in the bank account. Straight away you can take it as an exemption. Sir, here they are given the 2 years or 3 years, sir. But I need to file the return of income and I can claim this exemption at the time of filing of return of income only. But how can I utilize this 2 years or 3 years period? No problem. Up to the return of income, please try to invest. If not possible, try to deposit in a scheduled bank account. After that, you can take directly as an exemption, capital gain deposit scheme. If you are depositing in a capital gain deposit scheme also, the amount of exemption will be available. Now, gross capital gain amount, eligible investment 10 crores, whichever is lower only, exemption under section 54. Gross capital gain amount or investment amount or 10 crores limit they are imposed. Yes, whichever is lower only eligible as exemption. It is an important, already we discussed in an MCQ also. If long-term capital gain is up to 2 crores, yes, or you can easily remember 200 lakhs also, you can get that exemption for the 2 residential house property. That means you are selling the 1 residential house property long term. Out of that, you can purchase the 2 residential house properties. You can get that exemption for 2 residential house property, but this exemption is available only once in your lifetime. Next, long-term capital gain is more than 2 crores. Now, if you purchase the 2 residential house properties, that exemption will not available for 2 residential house properties. So, here 2 residential house properties are given. Can you tell me? Definitely the more cost only we can take it as an exemption. 1 residential house property only we can get it as an exemption because your gross long-term capital gain is more than 2. So, only 1 house you can take as an exemption, but that is at the option of SC. Obviously, SSC will choose the high cost. Next section 54B. Remember 54, transferred asset is a long-term capital asset of a residential house property. Purchased asset also residential house property. And if you purchase this asset, you have to hold it for the 3 years. Minimum holding period of the new asset is 3 years. Next 54B. Simply I will tell you, this exemption also available for individual or HF only. Reason I will tell you. Here you are transferring the urban agricultural land. That means agricultural land mostly will be available in the hands of individual or HF. That's why this exemption also restricted to that individual or HF only. If you are transferring any short-term capital asset or long-term capital asset nature, that means here asset nature may be short-term or long-term. So while you are calculating the gross capital gain, if you are invested that amount in the any agricultural land, that is an urban or rural also okay. So here agricultural land, that's why we have to use that word purchase only. For purchase, always they are given the 2 years time from the date of transfer. Capital gain deposit scheme here also available, and amount of an exemption will be gross capital gain or eligible investment, whichever is lower. And you have to hold this asset, and minimum period of holding is nothing but 3 years. Are you clear up to now? Now 54D, remember here this exemption is available for any SSC because you are transferring that any land and building of industrial undertaking. Here transferred asset may be short-term capital asset or long-term capital asset. If you are transferring the short-term capital asset or long-term capital asset nature of the land and building of industrial undertaking, but here transfer can be done by using compulsory acquisition. So here transfer means sale, exchange, extinguishment, relinquishment, all the things are available. But in section 54D, if you want to take this exemption, if government is taken this asset, land or building of industrial undertaking by way of compulsory acquisition, out of this, yes, some amount if you are invested in any other land and building of another industrial undertaking, yes, you can take the exemption. Here land related, yes, you can use the purchase, and building related, you can use the construction. But altogether, they are given the 3 years time for the purchase or construction, and whatever the new asset you purchased, you have to hold it for the 3 years. And capital gain deposit scheme is also available because they are given the 3 years time. Eligible amount of an exemption will be gross capital gain or eligible investment, whichever is lower. Sir, remember 54. I want to know the transferred asset and purchased asset. Long-term capital asset, that is a residential house property. If you transferred with the proceeds, if you purchased the residential house property or constructed the residential house property, you will get an exemption under section 54. 54B, if you are transferred the short-term or long-term nature of capital asset, that is an urban agriculture land, and with the proceeds, if you purchase an urban or rural agriculture land, if you will get that exemption under section 54B. 54D, if long-term capital asset or short-term capital asset nature, that is transferred by using compulsory acquisition of an land and building of industrial undertaking, with that proceeds, if you purchased or constructed land and building of another industrial undertaking, you will get an exemption under section 54D. Now 54EC, this is an important, try to remember. So long-term capital asset nature, you are transferring. So what is that long-term capital asset? You are transferring land and building. So land and building can be held by the any of the SSEs. That's why this exemption will be available to that any SSE. So out of this gross capital gain, if you are invested in the long-term specified bonds. So long-term specified bond means nothing but NHAI bonds, RECL bonds, which can be redeemable after the 5 years. That's why you have to hold it for the 5 years. And time limit, they are given the 6 months. Within 6 months, you have to invest. Normally in bonds, so within seconds, you can invest. That's why they are not given the capital gain deposit scheme. And amount of an exemption will be gross capital gain or eligible investment or 50 lakh, whichever is lower. Are you clear? Now, I will tell you one thing. Long-term capital asset, you are selling the residential house property. You purchased one residential house property. That means transferred asset is a residential house property long-term, and you are purchased one more residential house property. Now you will get an exemption under section 54. And some more amount you are utilized in the bonds. So that's why now you will get that exemption under section 54 EC. So now 54F also important. Now we can discuss the 54F. Shall we start 54F concept? Yes. Yes, remember, long-term capital asset, any asset other than residential house property, because individual or HF only can claim this exemption. Already, residential house property covered in 54. That's why any long-term capital asset, example, jewelry, other than residential house property. Jewelry is a long-term capital asset. Now I am transferring that. So, but here, investment must be made from the net consideration only. Investment must be made from the what net consideration. With that proceeds, if you purchase the, with that proceeds, if you are purchased or constructed the one more residential house property, yes, you have to hold it for 3 years anyway. You will get 54F. Sir, residential house property transferred, residential house property if you purchase, that is 54. Any asset other than residential house property, if you transfer like gold and etc. And with that proceeds, if you purchase the residential house property, you will get an exemption under section 54F. But remember, out of the net consideration only, we have to make investment. The same time limit, because same time limits under section 54. Why? Purchased asset under section 54 and 54F is same only. Residential house property purchase or construction. Here also capital gain deposit scheme is available. Amount of exemption, remember, it is very important. Gross sale consideration minus transfer expenses, you got a net consideration 80 lakh. Indexed cost of acquisition, indexed cost of improvement, you will get a gross long-term capital gain 20 lakh. Remember, if you are invested the entire net consideration, example, net consideration 80 lakh. I invested also 80 lakh. That's why this entire amount of the gross long-term capital gain will be exempt. So here exemption is proportion to the, so gross capital gain amount, out of this, how much amount is exempt? Investment proportion to the net consideration. I invested the 80 lakh also, net consideration 80 lakh, investment also 80 lakh. So that's why 100% of this gross capital gain is exempt. Suppose gross capital gain 20 lakh. I invested only 40 lakhs, sir. So that's why how much amount of an exemption you will get? Exactly 50%. That means 10 lakh only. 54F is very important, amount invested out of the net consideration. But here also exemption amount will be restricted to 10 crore. Yes, amount of exemption means, yes, you have to apply this formula, gross capital gain into investment divided by net consideration, but this amount of an exemption should not exceed 10 crore. And one condition is there, or two conditions are there, very important. Sir, on the date of transfer of this long-term capital asset other than residential house property, SSE should not own more than one residential house property. That means even though I am an owner of one asset and you can purchase one more asset for this exemption, no problem. Yes, you can hold the one house at the time of transfer, but already you have one. Now, for this exemption, you purchased or constructed one more. That's okay. But during this, yes, 2 years for purchase, 3 years for construction, don't purchase or construct any other house. Yes, they're imposing the conditions, sir. Residential house property is a must and need for anyone. So that's why even though you have one also, no problem, purchase one more, you can get exemption. But after claiming these are all the things, if you purchased or constructed any other residential house property during the 2 years and 3 years from the date of transfer, yes, earlier exempted capital gain now taxable in the year of previous year, in the year in which the conditions are violated. So example, you have one and now you purchased and you can get the exemption of how much more? 20 lakh. Happy. But immediately in the next year, are you after 2 years you purchased or constructed anything, sir? In case of purchase within 2 years, in case of construction within 3 years, you purchased one more. Whatever, now you got an exemption, now that is taxable in the year of purchase or construction of any other house. 54G and GA just refer simple. 54G is nothing but, just I will read it. 54G is nothing but plant and machinery, land building, shifting of industrial undertaking from the urban area to rural area. I'm transferring some plant and machinery, land building. Why? So we are transferring the, yes, can you tell me, industrial undertaking from the urban area to rural area. So maybe these are short-term capital assets and long-term capital assets. And if you purchased and constructed the new land and machinery, new plant and machinery, land building in such rural area and all other notified expenses, these will be eligible for exemption. 54GA. So previously we are transferring that industrial undertaking from urban to rural. Now, yes, this is an urban area to SEZ area. Sir, because of this shifting from urban area to SEZ area, we are transferring such a capital asset. Out of that some amount, if you invested in such SEZ area or for notified expenses, that amount you will get as an exemption. Here also, they are telling you time limit before the transfer 1 year, after the date of transfer 3 years. Here also before the date of transfer 1 year, after the date of transfer 3 years, they are given. Are you clear up to now? If you clear up to now with the exemptions, you know what is a format and all the things you know. Exemptions list also you know roughly. No, tax rates, very, very, very important. Remember, if transfer take place before this date, we have one type of tax rate. If transfer take place on or after this date, we have to remember, yes, tax rates also amended. Remember, within 15 to 20 minutes, we can close this chapter. Try to remember. Short-term capital gain. Before amendment, we haven't two things, ma. Remember, listed equity shares, units of equity oriented mutual fund, units of business trust, we can call these assets as an financial assets. If these are the short term capital asset, we have to calculate the capital gain under section S 111A taxed at the rate of 15%. Sir, if these three assets are long term capital assets, if these three financial assets are long term capital asset, so we have to calculate the capital gain under section 112A. I think missed, and you can remember 112A. Sir, basic exemption limit 1,25,000 taxable at the rate of 10% and without indexation. Remember, in case of short term, don't think about the indexation, but here we can't take any indexation. So you got on one clarity. Before amendment, financial assets are three are there: listed equity shares, units of equity oriented mutual fund, units of business trust. Short term 111A, long term 112A, but taxable at the rate of 15% in case of 111A, taxable at the rate of 10% in case of long term capital asset, that is on 112A, and basic exemption limit 1,25,000. Remember, without indexation. Next. Sir, any other capital asset like gold, etc., building, lands, anything also taxable at a normal tax rate. Remember, in capital gain chapter also, this income is taxable at the rate of normal tax rate other than 111A. Next thing, specified securities they are given, ma. That means listed securities other than units and zero coupon bonds. Before amendment, ma. Before amendment means before 23/7/2024. In case of long term, they are classifying these two as unspecified securities, that is listed securities other than units. Yes, other than units, and zero coupon bonds. They are given optional payment of tax, ma. Without indexation 10%, with indexation 20%. Whichever is more beneficial, yes, you can follow. Specified securities means these two, listed and zero coupon bonds. Listed securities other than units and zero coupon bonds. Without indexation means nothing but what, ma? Without indexation means definitely income will high. So that's why they are restricting the tax rate 10%. With indexation, income will low. That's why they are increasing the rate 20. Now, unlisted securities, remember, ma, this list important. Unlisted securities and shares of private company, I am transferring these two as a capital asset if these are long term. For non-resident and foreign company, sir, in list unlisted securities and the shares of private company are held by the non-resident or foreign company. Now 10% without indexation, for others 20% with indexation. So all other capital assets, long-term capital asset 20% with indexation. Again, I am repeating, this is a transfer date. If the transfer took place before this date, short-term capital gain 111A 15%, other than 111A normal tax rate, 112A 10%, 1,25,000 basic exemption limit. Specified securities option will be there 10% without indexation, 20% with indexation, whichever is more beneficial. Unlisted securities, shares of a private company, for non-resident or foreign company 10%, others 20% with indexation. For non-resident or foreign company, we can't claim any indexation, ma. So indexation benefit is not available for non-resident. That's why without indexation 10% only. Here we can take indexation. That's why 20%. So what is the position? What is the position? If the transfer take place on or after this date. Yes, these three, I think you know, financial asset. If these three financial assets are short-term capital assets, taxable under 111A, but now rate increased from 15 to how much, ra? 20. So other capital asset, yes, normal tax rates only, there is no change in this. Now, if these are the three financial assets or long-term capital asset, now 112A you can apply. Tax rate increased 12.5. Instead of 10, they increased 12.5. And basic exemption limit 1,25,000. Here also without indexation. Without indexation. Yes, try to remember this is a main amendment. I'm highlighting with a pink color. Listen. Land or building or both acquired before 23/7/2024. Remember, land, building or both acquired before this date. Remember, and transferred on or after this date. What is the point? Normally, after on or after this date, they are discontinued the indexation on all assets, sir. But for individual HUF, that too resident individual and HUF, you have to give the indexation for these assets. Why? I purchased one land or building in 2010. I'm an individual resident only 2010. Why I am purchasing? The land value will be more. I can get the gain also. Sir, how you can kill my thinking? So that's why if purchased before this date and transferred on or after this date, if you are a resident individual or HUF, while you are applying the tax rates, without indexation, you can apply 12.5. With indexation, yes, 20%, whichever is more beneficial. Others, example for partnership firm, one land or building or any other asset is there. For that, without indexation, 12.5%. Previously, 20% with indexation, but now they discontinued the indexation benefit. So that's why they're decreasing the tax rate, 12.5. Sir, land and building acquired on or after this date, any other assets, any other assets means nothing but what, these are all the things they are given the without indexation. How much, 12.5. What is the change they made? Now for long-term capital asset, we can't get indexation. Even though that is a long-term capital asset also, we can't get any indexation. Remember, here anyway we can't get indexation. Here also they are discontinued the indexation. But indexation facility available only for the resident individual or HUF. They are acquired the land, building or both before this date and transferred on or after this date. Indexation not a mandatory. While you are calculating the tax liability, you can calculate without indexation 12.5 rate, with indexation 20%. Main point, important point, indexation benefit only for the purpose of tax computation only. While you are, example I will tell you, I am a resident individual. Yes, I calculated the long-term capital gain on my land. Without indexation, I got an 3 lakhs. With indexation, I got an 50,000 only. Remember, now you can apply, yes, you can apply the tax rate. Can you tell me what is the tax rate? Without indexation, 12.5. With indexation, 20% you can pay. Whichever is beneficial, yes, you can pay the tax. But while you are calculating the total income, salary, PZ, BP, capital gain, in these, yes, you have to show without indexation, that is 3 lakhs. For computation of tax purpose only, computation of tax rate purpose only, they are given this option while you are showing in your total income. Without indexation only you have to show. Now, here you will get a complete clarity of this chapter, indexation. If transfer take place before you are enjoyed this, indexation benefit available to long-term capital asset, because transfer date is 23/7/2024 before. You can get the indexation on long-term capital asset, but in these cases, you can't get indexation. What are that? Bonds and debentures, but example, capital indexed bonds and sovereign gold bonds, yes, you can get that indexation. And non-resident is not taken that index, not eligible for indexation benefit. So, section 50, depreciable capital asset related Depreciable capital asset related capital gain computation, we can't take indexation. Slum sale, business restructuring chapter, we are already discussed. We can't take indexation. Market linked debentures, units of specified mutual funds. I think 50 AA we discussed. Irrespective of the period of holding, we have to treat these two assets as a short-term capital asset. And 112A, I think financial assets. On these also we contact, that is unlisted equity shares and equity oriented mutual fund units, units of business trust. On these are all the things, even though long term we can't take indexation. But transfer take place on or after this date, indexation benefit is not available even if the capital asset is a long term capital asset. Now you have to remember, on or after this date, if any long term capital asset transferred also, no need to take that any indexation. But they are given that indexation facility only to that one person. Can you tell me who is that person, ma? Resident individual or HF holding the long-term capital asset. That long-term capital asset also land or building or both purchased before this date and transferred on or after this date. Then we can take the indexation in this case only. Remaining all cases, transfer is done on or after this date, we can't take the indexation. Are you clear up to now? And already in the last MCQ session also I explained this. Sir, generally individual HUF, AOP, BOI, AJP, if they are following the default tax regime, this is a surcharge rates. I think in basic concept chapter itself. But now, if the total income of these fellows, including these four incomes, what are the four incomes? Please read along with me. 111A, 112A, 112 dividend income. So one note point you have to remember, maximum surcharge rate on these incomes only we can apply 15%. Maximum surcharge rate we can apply only, what is that percentage? 15%. But now, here, maybe we can apply the 25 also. Up to this now, okay, if your total income less than or equal to 2 crore, no problem, 15% okay, because on these incomes also we can levy 15. But if the total income more than how much amount? 2 crores. Check. These four incomes. Yes, these four incomes. Maximum how much ma? Total income is more than 2 crore. Now we have to apply 25. But no point saying that maximum surcharge rate is 15 on this. Then surcharge rate on remaining income. If remaining income is less than or equal to 2 crore, 25%. Sorry, more than 2 crores, 25. Less than or equal to 2 crore, 15%. So simple. Sir, if your total income is more than 2 crore, now we have to apply the 25% surcharge rate. But on these incomes, just 15 only. On these four incomes altogether, just 15% surcharge only. But remaining income related surcharge is important. Remaining income, please calculate more than 2 crore, 25, because that exceeds. Less than or equal to 2 crores, 15%. Now, sir, if that individual HUF, AOP, BOI, AJP, if they are following the old regime, these are the surcharge rates applicable for the old regime, that is the normal tax rates followers. Sir, up to this, okay. But if that amount exceeds 2 crore or amount exceeds 5 crore, maybe we can apply the 25 or 37 surcharge. But note point saying that maximum surcharge rate on these four incomes will be 15 only. Remember, when this special note point will apply, in my total income, 111A, 112A, 112 and dividend income, if anything is there, while you are applying the surcharge rate, take care. More than 2 crore. Sir, if your total income is more than 2 crore, but you can apply the surcharge rate on this income, more than 2 crores, less than or equal to 5 crore, 25 you have to apply. But on these incomes, just for 15% only. Then remaining income, please check. If the remaining income is more than 2 crore, yes, 25%. Remaining income is less than or equal to 2 crore, 15%. Sir, one more case. If your total income is more than 5 crore, now you have to apply the 37%. No need to apply 37, because on these incomes just we have to apply 15, and remaining income related, remaining income is more than 5 crores, 37%, less than or equal to 5 crores, 25%, and less than or equal to 2 crores, 15%. Just remember this, we can expect one MCQ from this also. So that's end from my side with respect to the capital gain. And what are the things you have to remember? Amendments. 47, one amendment is done. If any gift, will or inheritance or irrevocable trust, if these things are done by the individual or HF, that is only not treated as transfer. In period of holding, yes, 3 categories are converted into 2 categories. And next, what is the change? Capital gain tax rates also changed, and indexation benefit related also changes, or indexation benefit related points also change. Now, before in your examination, transfer date you have to check. If transfer date is 23/7/2024, before the date they are given, so entire things already you know. But if they are given on or after, remember, indexation benefit is not available, even if that asset is a long-term capital asset. But in one case only, they are given that indexation benefit. So not a mandatory, you can follow with indexation or without indexation, whichever is beneficial for you, that you can follow. Whichever is beneficial for you, you can follow. That is for tax computation only. While you are including that amount in the total income, you have to show that without indexation only. Capital gain computation always without indexation only, because they are discontinued that indexation on or after if you are transferred. On or after this date, if you are transferred, there is no indexation. That's why without indexation things only we have to include. While calculating the tax only, they are given this benefit. Are you clear? That's end from my side with respect to the capital gain chapter. Quickly revise, just remember this, what are the amendments, and that's enough. Don't think too much about this chapter. But slum sale and business reorganizations like partnership into company and sole proprietorship into company, company into LLP, these are all the things we discussed in the business restructuring chapter that are most important. But these are the points we discussed for 1 hour only for the purpose of amendments. Thank you.